Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our monthly recap for March. So if you're watching this today on Sunday, April 1st, happy Easter everyone. Enjoy your day, make it a good day. So on the markets, I'm going to be covering M1 Finance because this is the portfolio that is continuing to sort of evolve each week. You know, I have my allotment going in there every single Monday. It is adding $10 to my account. It's then triggering all my dividends from the following week to get automatically reinvested into my wife's. This is my wife's Roth IRA over on M1 Finance. So I'm running my Roth IRA over on Merrill Edge. And then I also have a rolled over 401k that I rolled over into an IRA over on Merrill Edge. And then I also have my cash managed account. So my portfolio is on Merrill Edge. I have some sort of stocks on Robinhood still, but those are from either referrals. Yeah, they're primarily from referrals. The cash, I sell off the stocks and then buy stocks that I would like to invest in, such as Ford. I believe I hold either 4 or 5 of Ford within my Robinhood portfolio. And then M1 Finance, all these portfolios sort of just do their own thing. So M1 Finance, I set it up. I came up with 15 stocks we wanted to purchase inside of our portfolio. Some were, we have a variety of stocks. So let's go over and check out our portfolio for let's go ahead. They don't have a month here. So right here, what we're looking at is the all-time change as of January 8th, 2018. So I created my wife's Roth IRA at nearly the peak of 2018, right before we had these pullbacks in February, and then continue to have pullbacks throughout February and then some in March. So regardless of when you guys want to get started in the market, all you have to do is come up with a plan of what you want to begin investing in, how much money are you willing to invest, and make your first investment. If it goes down, continue to invest little by little each week, because you don't know if the market's going to go up or down. All you can do is have your plan, stick to it. If you're going to invest $10, $20, however much, stick to that, add it in each week. That way it's able to average in regardless if the market is going up or down. If it is down, such as now, my portfolio is down 5.52%. That means that I'm able to buy in the majority of these stocks here. You can see that they're negative. I'm buying these at a discount. I've already made a decision within my mind that these are the stocks that I wanted to invest in for the long term. These are great blue chip stocks: Apple, AT&T, Johnson & Johnson, Kimberly-Clark, Lockheed Martin, Pfizer, Praxair. As the list goes on, you're going to notice most of these names are very common names. Cisco Systems, so Walmart's in there, all sorts of stocks, right? So I have 15 stocks that we decided. Some of them I decided. She added a couple, such as Praxair. I don't know if it's like pharmaceutical or healthcare, but she's a medical assistant. She works at the clinic or hospital or whatnot, and she sees that this brand is pretty common there, so she wanted to add it to the portfolio. Anyways, it doesn't matter whether the market's, at its peak or at its low, because you can't calculate it. All you need to do is jump in, begin investing, because over the long term, the market does recover. Your portfolio will recover. And then the way that we're currently investing in our portfolio, it's a dividend driven investment. So whether or not the stocks go down, that's great. That means we can buy more of them at a discount. She's getting currently a yield of around 3%. So if we click on our details here, this is the Roth IRA. It holds 15 stocks. I pay nothing for this Roth IRA, so there's no expense ratio. I'm not paying any management fees. It's just an amazing dividend portfolio that I created using 15 stocks, that 7 of these holdings have been paying out dividends for more than 10 years, and then 8 of these are just very strong contenders that are growing dividend stocks. So the average dividend yield, when I first initially created this portfolio, I set it at 3.25. Now you can see that we have, the average dividend yield for this portfolio is at 3.88. So the portfolio has gone, the stocks that were in it have gone down, but my average dividend yield that I'm currently buying into this portfolio is at 3.88. So if I have $1,000 invested into this account, that's $3.88. So, or 388. Yeah, $3.88 for every $100. For every $1,000, it's $38 roughly, so that you're invested into this account. So for every $10 that you're investing every week, you're roughly buying 38 cents more of dividends. So just sort of little math here and there. So here the performance over the last year. If I were to have invested in the stock for over a year now, I would still be up 14.76%. But because we've only really been in it roughly a little over, I believe, almost 3 months now. You know, January 8th is when we started. We're now hitting April. April 8th would be exactly 3 months. They don't have a 3-month, and I can't exactly click on this portfolio and drag here, but you can see that this portfolio shows that it's 100. I'm not sure why it shows as 100. This could be because I'm not sure. So the graphs are a little bit wonky. Okay, so let's go ahead and avoid the graphs for now. So I did want to talk about the activity that happened this month. So here, March 5th, March 12th, 13 days ago, 6 days ago. So every month or every week I have $10 that's deposited into my account on Monday. $10, as you know, triggers Merrill Edge, or not Merrill Edge, M1 Finance to auto trigger and buy stocks that you're currently down on. So what it does, if you have $10 added to your account, and I also made $7.41 from dividends. So Pfizer and Simon Property Group paid me $3.60, $3.81. That's $7.41. That wasn't meeting the $10 rule. So every Monday I have a bank deposit of $10. That's $17.39 that gets triggered. This then bought me a couple shares of Caterpillar, Johnson & Johnson, Walmart, and Altria Group. Now this continued on. So the next week in March, you know, I didn't make any dividends that specific week there. So what happened was when I made my $10, it took my $10. I also had a little bit of change. It bought Walmart because Walmart came out. You know, they were going through a lawsuit because somebody had said that they had fudged their numbers on their online sales when they may or may not have, and it wasn't, you know, complete truth. And then I think there was a couple other news. That's why I make these videos, those weekly recaps, and then post those articles over on Facebook, because I can't remember all that's going on with each specific stock all the time. But over the long term, Walmart right now is looking to drop their cash registers, move to an app, and they're buying a like health company as well. So they're doing quite a bit. Over the long term, I think Walmart will continue to grow, and you know, anyways, so let's see here. So that was 10.02. Then the following week, this is 2 weeks ago, again I was paid out $4.26 in dividends. $1.97 from Praxair, $2.29 from Johnson & Johnson. I added my $10 that triggered my cash buys. Then I was able to buy more Walmart, more Altria Group, Simon Property, Praxair. So there we go, $14 automatically bought stocks that were down at the moment. It was able to average down for me. I had to do nothing for it. And then here again, I was paid out just recently this last week from Lockheed Martin and Avery for $2.34 and $1.25. That didn't quite meet that $10 threshold to auto buy. What I did, again, Monday, $10 deposited in. That triggered my buys. I was able to buy Altria Group, Praxair, Kimberly-Clark, Avery. So guess what? Walmart did not get bought up within this because it was no longer at a position where it was able to be averaged down on. So actually, it may actually have hit over my threshold that I'm allowed within my portfolio. So instead of buying more Walmart, it chose to average down on these specific stocks that it felt these were the most, these are the cheapest that I was able to average down on in order to build my portfolio percentage to where it needs to be. So here you can see the current actual, value to how much I want in that specific, my target. And so target or Apple, like Apple for example, it's meeting the target of actual 70%. The target's 7. Here, AT&T 6.8, 6.7, 6.8. So these ones here would be triggered prior to anything at a 7. And if we move down the list here, Praxair is at 6.6. And then we have a few down here like 5.7, 6.7, 5.8. So the one that's the furthest away from a actual target number would be the 6.6 out of 7. That's a 0.4 difference there, which is greater than any of the other ones, and then 0.3, 0.2, 0.1, and then so on. So that's where my money would get invested until that target is met. And then, so it's able to average down on these positions that I may be down on. So Walmart, there was a point where this stock had tanked by more than, what, 15% at a time. Let's see if I can pull the graph up here. So it actually has still came down quite a bit, but it's not at all-time lows. You can see here that it was down at 346 for a while, has came back up. It's now sitting at 365 roughly. So that's $15 difference from when it was sitting at the bottom. Now this stock's only lost me $43. So one thing that I really like about M1 Finance, besides just having the auto reinvestment, so people talk about DRIPs, the dividend reinvestment programs. I don't have to specifically target which stocks I want to enable DRIP on. This will automatically enable DRIP, and if my target is, or if my target percentage is not being met, my actual percentage is lower, then I'll automatically buy that stock. So for example, if one stock, I want to cut it off. I don't want my auto investments to go into it. I will make my target for one of these specific stocks. I'll click on it. Actually, I would click on rebalance. So let's go back here. I would click on rebalance. Oh, that's not, how would I do this? It was my pies, I believe. And then I would click in here. So if I wanted to cut off, this REIT, for example, so the current percentage is 7. I don't want it to invest in there. I want the target rate to be 1, which will always be met unless the stock gets dropped. So I would make the target at 1%, meaning that I'm always going to be hitting that target. My actual percentage will still remain to be around 6.9 or whatever it's at, and I will always meet the target percentage. So I will never invest in this one until it's only 1% of my overall my target, and then it would add it to my portfolio, but that would be a very long time. So let's see here. One thing I do like to show on the M1 Finance app, or website, is if you click on these little arrows, so this shows you your current value of your portfolio. If you click on it, you'll see that starting value was back in January 8th, 2018. It was 0. I did add, some money in, and then I've had a market gain of negative $340.45. Now this one here, my market gain is actually negative 340. So this $340 is what I've actually lost in the market, but I've been paid out $36.56 in just dividends. So this is over 3 months. In 3 months, I was paid out $36.56. This is able to buy me more shares. That means in the following next months, the next 3 months, these are the next quarter. So within 1 quarter, I was paid out roughly $40. Imagine 3 more quarters. So 40, 40, 40. What's 40 by 3? That's 112, 120. Boy, I cannot do math right now. 3 and 4 is 12, I believe. Yes. So that's $120 and another 40 from my first quarter. That's $180. So $180 coming into my portfolio, right? So that's what I came up with here as my annual income. So this is another spreadsheet that I created. I guess we're basically done over here on M1 Finance. We kind of covered what exactly happened this month. And see, yeah, I already covered exactly all of that. So what I did over on, this is Google Spreadsheets. This is just a spreadsheet that I've created that tracks my base investment, how much I've actually added into this portfolio. My dividends are a little bit off. I need to work on my calculation there to get that. My annual income right now is at $180.88. My invested difference is, again, if you click on here, the invested difference, I've lost $303.89. This shows 340 and 44 because when you add all of these together, down on the bottom right hand side it says minus 340, 44, but 340, 45, 340, 44, whatever. Because I've been paid dividends, it really counterbalances out. So I got to tweak these numbers a little bit here because these dividends paid out allows me to buy more shares at a discount, which increases my yield, which increases my annual income, my monthly income, and so on. So here is just, you can see that I'm only up in 2 stocks, Cisco and Lockheed Martin. These are great stocks, and all these other ones are currently buying, or they're selling at a discount to where I had bought them. And you can see that my current average yield is, let's see here, average is 3.22 for what I'm currently holding. So of these current yields, you can see that the annual income is, based on the number of shares and what their current paying. So here is the current dividend payout per year, 264. See, I think that's just a manually entered number there that I added in. So I didn't actually check if some of these did increase in dividends. I guess I could do that really quick. Hold on one second. Okay, and we are back. So what I did here is I went onto my Market Pro software that I have available from Merrill Edge. I took each of these ticker symbols. So here I have my Merrill Edge platform. So for example, if I want to look up Walmart, for example, WMT, I could click enter. It would give me all the fundamentals of this company. So I just have company profile selected. Here on the right hand side, I can see the dividend yield, or the dividend that they pay out, is 52 cents per share each quarter because it's a quarterly paying dividend, and the current yield is 2.33. So here I entered 70 cents for Walmart, 52. So here's 52 for Walmart. I multiply it by 4 because it pays out 4 quarters. That gives me 208. So that's my current dividend for the entire year. So here I'm getting paid out $50.92 each quarter roughly, because in one quarter all of these stocks pay out in one quarter. So January, February, March, that's one quarter. I get paid $50.92. So if I go back to my prior month, which is February, so here this is March, I just clicked on February. Here you can see the differences slightly. I'm still trying to edit my spreadsheet, so I'm kind of flipping between these now. You can see, so here this is gonna be my February one. I'm just gonna say Feb, so you guys can just see which one I'm in. And then over here, I'm going to go ahead and say this is my March. So I'm going to go ahead and flip back to my February one for now. And here I was getting paid out $48.23 this quarter. Now I bought more shares in, right? I bought more shares because the market came down. I invested $10 each week. And then I also had roughly $40 in dividends paid out to me, because I started this profile in January 8th, so my first X dividends either, they didn't trigger until after I bought those first few on January 8th, so I had already missed some that usually trigger on X dividends on January 1st and so on. So it didn't start rolling until right around February is where I began to get more dividends. So that's why my initial, I only got paid out $36 for my first quarter. My following quarter, now that my portfolio, I'm going to flip over to March now. In this upcoming quarter, I'll make roughly $50.92. And of course, in the next quarter, so right now we're starting our second quarter, which is April, May, June. That'll be my second quarter. That'll be $50.92 roughly, probably a little bit more because I'll be able to buy in each week, plus I'll be able to add those dividends, which will slowly. So right now we're looking at roughly $50.92. We're going to come back next month, the following month, the next following month. We're going to look at the third quarter, or the second quarter completion after the third month. But what you can see here is that our yield jumped up from 3.22 in February, and our annual income went up from 179.23 to now 3.63 is our average yield, and our annual income has jumped up by to $203.91. So that's roughly what, a $20 difference. Now I only bought right around $40 more worth of stock. But my dividends, my annual income went up $20. That's because I bought more shares at a discount. I also reinvested those dividends. And if you look here, let me go ahead and take these dividends here. This is the current dividend back in February. And this is the current dividends here in March. So I have paste these right by each other. You can see that Altria increased their dividend slightly from, whatever there. I'm making 16 additional cents. And here, this is Cisco. Cisco, I'm making an additional 16 cents. And here, Praxair, they increased theirs by 15 cents. You divide that by 4 is what they increased it by. So here, this is an additional 40 cents. So they increased their dividend by 10 cents each time they're paying out quarterly. So Blackstone Group, I think the numbers were off on the last one. So if we look up BX right now, let's go take a look here. And then 404 to 406. So they increased their dividend by like 0.05 on this specific one. And then Walmart increased their, again, by very little. That's 4 cents for the entire year. So they increased their dividend by 1 penny. So not too many, not a huge increase, but between all those 15 stocks, that's a difference of $20 in a year. Now, what was I going to look up? Oh yes, this one, the BX. So I can look up using my Market Pro here, or I can just show you over on dividend.com. So this is 85 cents. Okay, so that would, yeah, my information. Oh wait, 85 cents. So 85 cents by 4 is 340. So I'm not sure where I got this 176. Just to make sure that's the correct information, because I like to double check it. So yeah, annualized payout is $3.40. Blackstone Group has a very high yield, but it's a REIT. It's one of those ones. I like to have a couple REITs. I have WP Carey and Blackstone Group, which are 2 REITs. I like to have. You can see they've been hit by those higher interest rates, so they've gone down a little bit there. But just over the long term, I think that'd be great. So 85 cents, 340. I'm not sure where this 176 came from. So that's the difference there. 48.23 to now 50.92. And that is basically it. So coming up, let's see where I don't need this. Let's go ahead and get rid of that. And get rid of that color. And that. There we are. Okay, that was just for my example. Now coming up in the next week, I'm going to have Walmart and Kimberly-Clark paying me out, then Altria, and then WP Carey, and then Cisco coming up in the following month. So that's roughly another, let's see, if we want to just take a look here, we can just take a look. What are we going to get paid out next month? So here we have Walmart, and then we have Kimberly-Clark, which is right up here, and then we also have MO, which is right up at the top, WP Carey, which is right here at the bottom, and then Cisco right there. So in this month, coming up in April, I'm going to make $16.72 off my dividends this month. And then I'm also going to be adding $10 each week, which is $40. So I'm going to get $56.72 of fresh money added into the market where I'm buying these stocks at a discount. That's going to be bumping up my annual income again on these purchases. So that's basically it for this video. I'm going to be creating another video at the end of April showing this progression, and I'll go ahead and show the progression of this dividend portfolio. I think it's very interesting to watch. Even if you're only starting with a few $100s, the Roth IRA is a great investment tool because over the long term, guess what? Those dividends are going to be ramping up. At the end of this year, I'm looking at an annual income of roughly $200, and I started at $170. So what's going to happen next year? That's $200 added to my portfolio over the year. Now I'm going to make $240, plus my stocks may appreciate or depreciate, which I'll be able to buy more shares, which will increase my annual income even further, which will allow me to buy more shares. So $200 this year, $250 next year, $300 the following year, $400 the following year after that, and so on. And then guess what? When I retire at 59 and a half using this Roth IRA, my wife will be able to use this money 100% tax sheltered. She won't have to pay any taxes on the capital appreciation. She won't have to pay any taxes on those dividends. And if she wants to, by that time, she may be able to get in a monthly income of, right now it's only $16.72. That could buy you a couple, a coffee or two. If you wanted to buy coffee every week, I'm sure you could probably do that. You just buy like a regular coffee if you wanted to. But over the long term, this is just another investment vehicle that I think is great. So that is basically it for this video. If you guys have enjoyed the video, hit the like button. Remember to subscribe for future financial videos. If you haven't checked out M1 Finance, I have a whole bunch of videos. I have a playlist. I will go ahead and have the playlist in the description below and also in the comment section. That way you guys can take a look at my past M1 Finance videos covering how to create your Roth IRA, how to set up self enrollment for your $10. I like $10 because it triggers all my dividends for the following week, just to make sure I'm reinvesting those dividends as fast as I can each week. So that is basically it. If you have any questions about anything that was covered in this video or M1 Finance, or you'd like to take a look at something, let me know in the comment section below. I always reply back to you guys. So that's it. As a friendly disclaimer, I am not a financial advisor or tax professional. The information in this video is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them. Showcasing different investment vehicles, dividend investing here, and plans, strategy. So that's it. Thank you guys for tuning in. I will see you next time. Have a great day. Bye. Enjoy your Easter.